Good evening, everyone, and welcome to another webinar on Mastering India Reports by FP&A Professionals Institute. We continue to do our regular series of webinars every Thursday at 8 p.m. IST. So today we'll be discussing about FP&A reports. What are some of the reports that management normally looks at? How are they useful for the management? And what are some of the nuances around it? So first of all, thank you for your trust. You've taken out your valuable time to spend it with us here to learn something new. So thank you for your trust. Pat yourselves on the back for taking action. Less than 3% of the people take active action to develop their careers. And in the very fact that you are here to learn something new today means a lot. And pat yourselves on the back for taking that action. A little bit about us to begin with. My name is Dhaval Parvadikar. I'm a qualified chartered accountant, 16 plus years experience. I worked as a CFO across various industries in India and in the Middle East, oil and gas, advertising, software, public relations, and also shared services of a global commodity trading company. Over the last 5 years, I've also been an active mentor, trainer, coach, and I've trained more than 5,000 professionals on various topics like FP&A, finance, business partnering, data storytelling, CFO coaching, leadership, and much more. Last year, I have quit my job and joined hands with my partner, Asif Masani, to start FP&A Professionals Institute. So this is our full-time gig now, and we are on a mission to empower finance professionals with new age skills and help them get to their next level. So I've also had the privilege of being part of 10 plus CFO events in the last 12 months or so. I've also built an active CFO community of 200 plus CFOs in the Middle East. Somewhere I've gone in as a speaker, somewhere as a host, as a panelist, as a moderator. So I regularly attend and get featured in these events that happen across Middle East and India as well. So that's a little bit about me. Happy to partner with Asif Masani here. Asif, a quick introduction from your end.
Thank you so much, Dhaval, and happy to partner with you as always. Quick introduction about me. So I have been working in finance and FP&A for over 15 years now, and I have had various roles. Started working in audit in 2010, and then moved into FP&A in 2013. So over the last, I would say, 10 years or more, I've spent right from being an FP&A analyst. My most recent role was FP&A regional lead for India and APAC at Coursera, which I quit in November 2023 to start FP&A Professional Institute. So I've been actively writing and teaching FP&A for over last 3 years now, and I have more than 5,000 students across various platforms. And as always, happy to partner with Dhaval. And while we did that in the last 3 years, we have also had the opportunity to meet top FP&A experts across the globe, right from North America, Europe, Middle East, you name it. So we try to bring all of that insights and all of the knowledge and practical applications of FP&A skills through our books, our courses, our certifications, our podcasts, all of the content that we create around FP&A. So that's a little bit about us. We have trained more than, I think that number is old now. I think it's more than 4,000 students now, and all of these courses that you see, we have been training right from the first course Dhaval launch was back in 2018, which was FP&A Foundations, and over the years we have trained more than now 4,000 students roughly. So that is a little bit about me and FP&A Professionals Institute and Dhaval. Happy to be here, and I'll be pitching in for the management reporting and the mastering reports section later in the day today.
Thanks, Asif, and welcome everybody once again. So a quick roadmap of what we are going to cover today. So we'll start by understanding what FP&A role is, where does it fit into the organization, why is it gaining so much of prominence today, and why does it enjoy this unique position of sitting very close to the CFO's office. We'll dive into today's topic, which is all about management reports. What are management report? What are the different types of management report? Where they are used, when they are used, all of those things we'll be discussing today. Also, a little bit about understanding your audience, right? So not all audiences, you understand your audience and then reverse engineer your management reports to serve that audience as well, right? So that's what you need to understand. And then finally, we'll dive into some different types of reports and any Q&A around that as well. So it's all in all, it's going to be a 60-minute packed session. So get rid of all the distractions and let's dive into today's topic. So understanding the CFO's office, right? So if you look at any typical CFO's office, there are three main responsibilities of a CFO. One is the controllership function, which is to ensure all the hygiene in terms of accounting, compliances, right? Making sure that all the entire accounting system is working, the AP, AR, GL, tax compliances, returns, statutory audit, internal audit, SOX audit, all of these things are the compliance machinery which come under the controllership function of the CFO role. Then comes your treasury function, which is all about managing money, your cash, your banking relationships, making sure that you're adequately funded for your working capital, for your capex projects, the fundraising on time. All of these things come under the treasury function of the CFO's office. And then comes the performance management part. Somebody needs to keep an eye on the performance of the business, tell the business as to how they are performing. Are they hitting their targets? Are they hitting their budgets, forecasts, management reporting, pricing, scenario planning, different kind of variance analysis? All of those things are coming under the FP&A function. So that's why FP&A kind of enjoys this unique position of sitting very close to the CFO's office, because the main role of FP&A is to empower the CFO and other senior business leaders in the company to take prudent financial decisions. So that's where FP&A sits into the organization. Now, what are some of the key activities involved in FP&A? Now, no matter which company you go into, small, medium, large, you can find some or the other variation of these four activities. One is budgeting, right? Budgeting is your annual exercise that you undertake to come up with an estimated financial statement or a P&L for the next financial year. Your estimated revenue, different types of costs, and your estimated profit and loss account. Forecasting is tracking the ongoing performance of the business. For example, let's say if Jan to December is a financial year and Jan to March actuals are over, now I would be preparing my Q1 forecast, or something called as a 3+9 forecast. It is 3 months of actuals and 9 months of estimates. So this tracking of the performance during the financial year is done by forecasting. Some companies do a quarterly forecast, some companies do a monthly forecast, depending on the size and complexity of the business. Then comes management reporting. At every step, you will be delivering different kind of management reports for different stakeholders for them to understand the performance of the business and take some decisions. And in order to execute these management commentaries, you will be carrying out variance analysis, that is different types of comparisons, actual versus budget, actual versus forecast, current quarter versus previous quarter, current month versus previous month, all of these different kind of comparisons, and then understanding the business reasons for these variances and capturing them in your management commentary. Then comes profitability analysis. A company may be structured in a different way, right? One company may be structured branch wise, the other company may be structured business unit wise, some other company might be tracking product wise. So you compute all these different levels of profitability: branch wise, product wise, region wise, SKU level, project level, client level, depending on how your company is structured. And then you bring out this analysis for the management to take some decisions. So this is what largely FP&A role encompasses. While there are dozens of different kind of smaller activities that FP&A teams carry out, but largely they can be bucketed into these three groups. One is budgeting, then forecasting, and then management reporting or commentaries. Now, today's focus will completely be on management reporting. So what is management reporting? What are the different types of reports, when they are used, how they are used, what is the kind of complexity, frequency? All of those things we'll try and understand in today's section about management reporting. So Asif, I'll stop sharing screen. You can take over from here.
Thanks, Zawal. So there's a comment in the chat box that will we be sharing the recordings? So yes, we will be sharing the recordings later on. So it usually gets published in a couple of days after the webinar. So don't worry, you'll get the recordings to refer later on. Okay, so let me share my screen. Okay, so before so our object, let me mute everybody so there's no background noise. However, if you have a question or if you want to make a comment, you could do that in the chat box. And later on, when we end in the last 10 minutes, we will open for Q&A. At that time, we'll allow you to unmute. Okay, so I'll be sharing my screen. Before I get into showing you how the practical management reports look like, I'll just give you a quick overview of what are management reports and how do you define them, especially for people who have never seen or never heard about management reports. Okay, so quickly, management reports are usually they are called as MIS in many organizations. They are even called as natural P&L. Some people call it departmental income statement. Some people call it business unit wise income statement. So it has different names. However, these are reports internally used by almost everybody in the organization, especially people who are in the mid management to senior management level. And what this ends up doing is it creates a common language when you interact with the senior folks in the company. So these reports end up being used almost by everybody, and it creates a common language. Also, when you compare it to, for those of you who worked in traditional accounting and audit roles, they might be familiar with the normal traditional P&L, income statement, balance sheet. So compared to the traditional reports, these management reports are different in the way that they don't have to follow any regulations, or they don't have to follow accounting standards or any company laws. So you could do that, or you could present these reports as and how the management wants to see the business. So they are usually presented in a very logical and a very very easy to understand the business manner. And you could say that it usually replicates how the businesses are structured, and the reports would usually be structured in the similar way how businesses are or the business units are structured in an organization. So with that background, I'll also talk about some of the common qualities of a good management report. So usually it's not too lengthy, so you'll not see hundreds and hundreds of sheets of Excel in good management reports, or maybe 50 different slides. Usually it is short and concise and decision focused, also intuitive to understand, and it also should have a consistent look and feel. You cannot be sending a management report or a month end report which is looking something different in month one and then changing it every month in month two, month three. So usually once you agree upon the format and you agree upon the look and feel of the report, you tend to use the same consistent format month on month, so that everybody knows where to look for which numbers, and it becomes like a habit. Okay, for if I want to look at this particular number, I need to go to the second page or the third line. So that becomes a habit when you have a consistently looking management report. Frequency, most of the time it is on a monthly or a weekly basis. So most management reports that you prepare are either monthly or a weekly basis. Sometimes if it is not very crucial, it could be done on a quarterly basis, especially if you are doing forecast. Again, forecasting is a separate topic which we usually cover in separate webinars and in our certifications and courses. But if you're doing a forecast on a weekly basis, on a quarterly basis, then you might want to present, or you might want to prepare certain reports which are not very crucial on a quarterly basis. Usually monthly and weekly, and maybe sometimes quarterly. So that's on the frequency. On the accuracy part, it need not be actually 100% accurate. So a lot of people have a misconception that your management reports need to be 100% accurate. They need to be accurate as it can be. However, many times you may not have 100% visibility of the final number where you have to publish these reports. So it may happen at times that you may not have 100% accurate data. You may have to live with, or you may have to present 99% or 95% accurate data. However, you should be knowing how does it tie to the numbers or the final numbers. That reconciliation we should be able to do. So these are some of the good qualities, or say qualities of a good management report. Okay, so now that we have covered the basics of management reporting and understood what are the qualities, what we will do is I'll take a pause, see if how many of you have worked on management reports before, and I want you to name a few of the management reports that you can think of, for especially those who have started working in FP&A, or even if you're not working in FP&A, you may be aware of some reports that you deal with your FP&A teams. Okay, so type some names of the management reports that you think are most important reports or most common reports in the chat box. Okay, I'm waiting for a few. What could be the most common report? Okay, so I have a comment in the chat box which says profitability analysis report. Okay, flash reports. Okay, flash report is a common one. What else? Okay, so let's look at some of the examples of management reports. Okay, so let me stop sharing my screen. Okay, so these are some common examples. So I think most of you have mentioned all of these reports. Flash reports, profitability analysis is something you would find in your month end and the quarter end reports. Capex, OPEX, run rate monthly is what Raghav mentioned. Global orders, summary reports, weekly, monthly sales reports are reports that you usually prepare depending on if you are working on the revenue side. Budget analysis, variance analysis, please, what is a flash report? Okay, so we'll cover all of these reports that you see on the screen one by one. Okay, but first let me talk about the most common report which you usually prepare after every cycle ends. So usually there is a calendar, and then after the books of accounts are closed by the controller or the accounting team, then you start preparing your month end, or you start preparing your month end report. So let me give you some examples of month end reports. But while we do that, I will also first explain to you how a common one pager month end report looks like. So for that, we'll take examples of couple of industries. Okay, so let me take an example of a banking company first. Okay, so I'm sure you must be familiar with banks. Typically, they deal in products like loans, deposits, uh, credit cards. So these are the common products of a retail bank. And most likely, their revenues would be one of these three, which would be either interest margin, so which is the difference between the interest that they earn on the loans that they give out and the interest that they have to pay to their depositors. So interest margin is one of the common revenue line item for a bank. Transaction fee could be another one. Commissions could be another one, or insurance sales, investment sales. These are typical revenue lines for the bank. And then you have common expenses, which would include your salary, platform and technology expenses, branch related expenses. NPA is written off. So people, when they don't pay back loans, the banks need to write them off. Administrative expenses, fraud related expenses. So these are some common expenses of a bank. So when you create a one-page management report, what you do is you create two sections on the page. The first half of the page is usually a mini income statement. And what it has is the top three revenue line items. It could be the income streams. It could be the top three products, depending if you're which industry you are doing this for. So usually you would have the top three or top five revenue line items, and then the top five or top seven expenses. And below that, in the second half of the page, you would typically have your drivers, which are also called as key performance indicators. Let me highlight that in another color. Okay, so what these drivers do is they help you understand. First of all, these are not P&L line items. So you have the P&L on the top. These are non-P&L line items, which usually drive the P&L numbers or the income statement numbers. So for example, your end of period loan balances and end of period deposit balances in this example is driving your net interest margin. So net interest margin would depend on two drivers. One would be the balances and the other would be the interest rates. Okay, so these are the two drivers of the net interest margin. For transaction fees, your driver could be your how much assets do you hold in the bank at the end of the year, or what is the average assets under management for the bank, or what are the number of insurance policies that the bank has sold, would do define the commission or would drive the commissions. So this is the way you create a one-page management report where you have the income statement on top, drivers or non-operational metrics, which you call as KPIs, key performance indicators, which usually drive the income statement at the bottom. And then when you do the month-end commentary, which you are calling it, where somebody messaged in the somebody put it in the chat box about variance analysis. You try to correlate your revenues and expenses with your drivers, and you try to make sense of what was your budget or what was your forecast. In some cases, what are your actual numbers and what is the difference, and why is it different, what is causing it to be different, how we could improve in the next period. Okay, so these are the things that you think about when you create a month end report. Now, you could do this for any industry. You don't have to necessarily. So the principle would remain the same. You would have the income streams on the top, expenses. Then at the bottom, you would have the key performance indicators or the drivers. Okay. So this is how the first one pager management report looks like that we talked about. And this is usually the page which will come again and again in your month end reports, quarter end reports that you would be using for your analysis and your reporting. Okay, so this is for a retail bank. Now you tell me, okay, how do I do this for a different industry? So let me take another example. Let me open an example of a FMCG company. Okay, so again, a similar structure you would see this is a company which is selling beverages, manufacturing and selling beverages. So you would see the sales number, the discount, then you get to the net sales, cost of goods sold, which is the cost of producing the food products. Then you get to gross profit, you have the distribution and warehousing, and then you have the fully delivered margin. Again, this doesn't have the this is not a complete P&L. This is a part of the P&L. And in some reports, you may want to track complete P&L. Some reports, you may want to track a part of the P&L, depending on who's reviewing and what they want to look at. Again, you will have KPIs at the bottom. So volume numbers, your gross profit margin, and your fully delivered margin percentage. These are some examples of. This is an example of a one-pager report in in a FMCG or a food and beverages type of a company. Okay, and if you notice, most of the times you would want to make these reports very dynamic. So if you want to slice and dice these reports into different business units or different products or different clients, you should be able to do that. So if I want to just look at one of the product P&L, I can just click on that. So right now, what it is showing is 2015 and 2016 numbers for the month of March. The March month is highlighted, the third month is highlighted. If I want to look at the January comparison for 15 versus 16, I can just click on January and I could just click on maybe if I just want to look at one of the products, which is Red Bull, I could click on that and I could just see that particular part of or that particular product PNL. If I want to look at all the products, but I want to look at only one particular client, okay, I want to just look at it for one particular client, let's say for Walmart, okay, I could do that as well. So usually these reports are dynamic and you can create slices and dices of data based on you can do that in Excel, you could do that in tools like Power BI, also you could do that in other tools that FP&A teams use. Okay, so these are examples of your month-end report. I'll take a quick pause before we jump on to the next report. I'll just see if there are any questions in the chat box before we get to the next part. Okay, somebody mentioned that they want to know about the flash report. Okay, so let me share one example of a flash report as well. However, you keep this in mind that you cannot blindly take any of these reports that we are sharing, right? So, although you could take inspiration and you could create your company's management reports, taking a lot of learning and inspiration from these reports, but in no place I've found that I've just taken a template of one company and I've just copy pasted that in the other organization. So very, I mean, I haven't had any case like that. So every time I had to tailor made the reports dependent on the organization. Okay, let me be a little loud. Am I audible now, Samir?
We can hear you, Asif.
Okay. All right. Amazing. So what I wanted to show you is an example of a flash report. But before we look at the flash report, what are flash report is one of the question, right? So you have your month-end reports, which are usually sent on a frequency of a monthly basis. But what happens in a couple of cases, you might need more frequent reports. So you might need weekly reports. You might need daily reports for especially KPIs, which are very critical. So, say for example, your company has 10 key performance indicators, and three of them are the most critical ones, or one of them is a North Star metric, or the most important KPI, right? So, for the important ones, especially most likely they are the revenue numbers, or they might be some important expenses that the company may want to track, or it might be the marketing spend. So, there might be two or three things that the management may want to look at on a more frequent basis rather than on a monthly basis. So then you do a weekly report, and most likely sometimes you do a daily report. And when you do these reports on a daily and a weekly basis, these are typically called as flash. So that is one reason where flash reports, one way the flash report helps. And the second way it helps is when the books are not closed and you need to provide an estimate of the final numbers for the month end. So you would use the flash reports to provide your best estimate at that particular time. Say, for example, you are on the 29th of the month. There are still 2 days to go for the month to close, but the management still wants to know the estimate for the month end. Okay, so now you have 25 days of actual numbers. You need to do some sort of estimate for the remaining 6 days or 5 days, and then provide a report to the management to show them how the month could end or how the month is most likely to end. So these are couple of places where you use flash reports. Okay, one is reporting on a frequent basis like daily or a weekly basis, and then second is when you have to provide an estimate of the month end number and the month has not yet ended or you haven't seen the books of accounts close yet. Okay, so these are the couple of reasons why you would be using flash reports to bridge the gap between the actuals between the month end reports. Okay, now let me give you an example. Again, I'll repeat that again, that you usually cannot just pick and choose, pick and plug any report and use that in your organization. So again, this is a very customized flash report for one of the organizations that I had created. Okay, so here what had happened is I had sat with the department head, or in this case it was the global head of marketing, and that person wanted to see the six most important metrics that were important to that particular department or that particular function, which is the marketing function. And because they were at a global level, they wanted to look at the global numbers, and also they wanted to look at the regional numbers. Okay, so I took the most important six metrics or the KPIs that a company was tracking, and I started tracking them for the different regions and at the global level. Okay, so when I sat with the person, I asked them a few questions, and based on that, I came up with this format of the report. So they wanted to look at what was the last week numbers looking like. Okay, they wanted to know what was the month to date performance, or MTD. In this case, say for example, we are on the 12th of June right now. So what was the first week of June, which is 1st to the 7th, and how does the month to date, meaning what has happened till from 1st of June to the 12th of June. So based on that, I had created this report. And then there was a full month estimate, which was 12 months of actuals plus 19 days of forecast. So this was created on a very customized basis for one particular set of stakeholders, and was agreed upon between us that we will be creating or we'll be sharing these reports on a weekly basis. Okay, so this is an example of a flash report. You could have hundreds of examples of such flash reports, but they would be very customized to your organization, to your industry, to your team, and most importantly to your stakeholder. Okay, so this is what a flash report example could look like. Again, I'll repeat, you cannot just take this and start using this in your organization. It'll not make sense. You'll have to follow the same approach, understand what the important KPIs are, understand who you are preparing these reports for, understand what they are looking for, and based can create your own customized flash report, or any report, or any management report that the that your seniors or that your stakeholders would like to receive or see on a monthly or a weekly basis. Okay, so these are some examples of month end reports and flash report that I had to share. We can go back to the slides. Okay, so we talked about month end, quarter end reports, we talked about flash reports. There are a couple of other things that I wanted to cover. So many times you might be working with sales teams, marketing teams, you might be working with functional teams, HR teams, right? Supply chain teams. So depending on which team you might work with, you will have to again follow the same approach, understand what they are doing, what are their most important key performance indicators for their evaluation or for their business, and then create reports very tailored to them. Again, I will share some examples, but you cannot just pick these reports and use it. You'll need to do this entire activity yourself with your team. Okay, so I'm sharing example of a sales dashboard where you have so this is a dashboard which is showing how the sales team is performing, which is mostly doing sales calls, and then based on the number of calls they do, they convert those leads into prospect into customers. So there's an entire sales pipeline, and so this sales dashboard is tracking how many sales happened in the last period, how many calls were connected, how many calls were converted, what was the total revenue, okay, what was the total number, what was the call drop rate, which is an important metric for them, what was the average duration of a call. So these are the some things that the sales head wanted to track for their team of 25 salespeople. Okay, again, this will be very different for what your organization would want or what your sales team may want. Another example of a HR report. Okay, so this is where I had sat with my HR team, and I try to understand, okay, what they wanted to track on a monthly basis. Okay, so they wanted to track the number of headcounts, they wanted to track new joinees, resignations, they wanted to track how many people are there in each location. They wanted to track employee by tenure. They wanted to know how many people are working right, how many people are less than 1 year, how many people are more than 1 year, between 1 to 3 years, and they wanted to track all of this information on a monthly basis. So you sit with your functional or the business teams and understand what they want to see, and based on that you create the report. Another example of a marketing dashboard, very similar, where you sit with your marketing team, understand what they want to see. In this case, they were spending money on 4 different channels, which is Google, Instagram, Facebook, and LinkedIn. They wanted to track the paid spends by different channels. They wanted to track how many leads were how many leads they were generating on a monthly basis, how many demos they were completing, which was an important metric for them, how many deals they could close out of those demos. Okay. So these are some important metrics the marketing team wanted to track. So based on what business you are interacting with, what function you are interacting with, you will have to understand their requirements and then come up with a tailored management report or a month-end report for them. Okay. Now, again, I'll take a quick pause, see if there are any questions. If not, I will go on to some other concepts on the management reporting framework or the performance management framework.
Also, we are slightly running behind, so I think we should continue. We can take the questions in the end.
Yeah. Okay. All right. So there are a couple of frameworks that we usually I have seen in my career. So there was one company, one banking company I used to work with, and they used to follow balance scorecard. So I'll just quickly give you an overview of how the balance scorecard looks like. So it has four different quadrants or four different compartments, you could call it, four different areas of focus. So first is the customer focus, where you are looking at customer centric metrics. Then you look at internal processes. Then you look at L&D or training, which is training your organization and team. And then finally you look at the financial metric, which is your revenues, your return on investment, return on equity, all the financial metrics. Okay, so the idea of the balance scorecard is that you just don't look at, you should not just be looking at the financial metrics. You should be looking at the holistic performance of the organization, including customer side, the internal processes, and the training and development. So what you do is for each of the quadrants, you list down a couple of objectives each. So overall, you would have four quadrants, maybe one or two objectives each. So maybe 6 to 8 objectives, and then you would also define how will you measure those objectives are achieved or not. Okay. So for example, for the customer focus, on-time delivery is one of the key objectives, and the delivery failure rate is how we measure it. Okay? So if the delivery failure rate goes above 2%, meaning something is wrong, ideally we want to keep it under 2%. Okay. And then you would track it on an ongoing basis, and you would be preparing these scorecards for different teams, different sales teams, different business units, and then based on their performance, you would also sometimes also their incentives and compensation get impacted by the balance scorecard. Okay, so this is an example of a management reporting framework, which is a balance scorecard. There's another company which I worked with, which is following a different management reporting framework, which is called as the OKR. So let me show you one example of OKR as well. So OKR is something that was first started used by Google in the early 2000s. And once Google started successfully using it, a lot of tech companies in the US also started using the OKR framework. And then this is how it looked like. So you have the mission, vision, and the top three priorities or the top priorities of the company in the first line. And then you cascade each of these priorities by different departments, different teams. I'll give you one example. For example, uh, Q4 goal of the company is to hit 100 million revenues. Okay, so now you will figure out, okay, out of the 100 million, how much will the department A will bring? Okay, so that will be 25 million. How much the department B will bring? That would be 30 million. How much the department 3 will bring? Okay, that is 45 million. Okay, we would need 6,000 new customers. Okay, so how many customers would this first department get? How many new customers the second department get? Okay, to do all of these things, the second department needs to also the departments need to maintain a 50% retention rate. Okay, so that is again a company level OKR and the OKR for this particular department. So this is the way you define the company goals, and then you cascade and assign ownership to each of the departments, and you would have most likely you will also have the name of the person who would be responsible for this part of the OKR. So at the end of the quarter, you exactly know how the company is performed and who's responsible and who's delivered, who's not delivered. And then you track the performance against the goals that you had set in the beginning of the quarter. So this is again a very effective framework popularized by Google, now used by many organizations across the globe. Okay, there are other frameworks as well. I mean, in the interest of time, I'll not go through all of them, but we cover all of these in detail in our certifications, which is the certified CDFP Dhaval. We'll talk about now, and I'll pass it on to Dhaval.
Yeah. See, we have covered all the points, right? We have come to the audience guide.
Yeah, I think we've covered most of the points. I think if you want to cover the audience guide, you could do that.
Yeah, let me quickly do that.
Yeah.
Spend a minute on that and then we can move to the next one. Yeah. So, like we had mentioned that you need to tailor your management reports to the different kind of audience. So here is a simple presentation guide that you can refer to when you are preparing your management reports. If you are addressing senior management and senior stakeholders in the company, then you should go for a strategic dashboard, which is high level, goal focused. They might not be interested in details. They might just want to be wanting enough information to take that decision, right? So that is what the senior management reports look like. Then for middle management, they are detail oriented. They like rich comparisons, in-depth analysis. They have the time to comprehend detailed comparisons, right? So you should give a analytical dashboard if it's a mid-level management audience. So like operational or tactical stuff, then you should give them something which is very action oriented, or actionable indicators, or very tactical, because they are not strategists. They don't have time to think, or neither they have the capacity to think, right? So you give them something which is very straightforward. You say, okay, red, you stop it, you green, you continue it, something like that. Very tactical, very action oriented, right? So that is how you should tailor your presentation. So senior management stakeholders, strategic dashboard; middle management, analytical dashboard; and for operational or executional, you can give a tactical dashboard. Cool. So these are some of the common management reports and the kind of frameworks that you can follow in your roles. Let me just cover the next part of it. Yeah. So now that you have understood, what are the different types of management reports, and it would be amazing to kind of leverage the hyping skills that FP&A professionals are leveraging, right? And CFOs are also looking for those kind of talent as well. So we did an extensive survey, and turns out that CFOs and finance leaders are looking for 5 critical skill sets in their finance staff, right? So which are those 5 critical skill sets? One is core FP&A concepts: budgeting, forecasting, management reporting, variance analysis. All of these things are your core FP&A concepts. Then comes your financial modeling. Yeah, then comes your financial modeling skill sets, which is all about your revenue models, business model, different kind of scenario planning, sensitivity analysis, seasonality, trends. All of those things come under the financial modeling aspect. Then comes your data storytelling, the way you are converting your data into an insight and a story and communicating to the business team is what matters, because they don't understand 10,000 lines of Excel sheets like how we do. So what visualization to use, what commentary to use, how do you use a strong narrative? All of those things come under your data storytelling bucket. Then comes business partnering, your ability to understand the business, partner with them, build strong cross-functional relationships, and influence business decision making. So that is what is business partnering. And then, of course, leveraging technological and AI developments that are happening in the finance and FP&A field. So these are the 5 core skill sets that CFOs are looking for in their finance teams today. So what we have done at FPI is that we have come up with our own comprehensive certification program. It's called the Certified Global FP&A Professional Program. It's a global certification built and delivered directly by CFOs and FP&A leaders. It has 10 comprehensive modules, which we'll talk about in a while. Everything through experiential sessions, MBA style, case studies, simulations, discussions, real life like looking data, and not just theory or bookish knowledge. Then you will also be part of our global alumni network. Students with more than 25 countries have taken the CA program so far. You also get sessions with a personalized career coach for some tailor-made guidance around your career. Placement support, not a guarantee, but placement support with your resume review, your interview preparation support, mock interviews. We also have an active alumni community where we keep sharing jobs. We, on an average, keep sharing 3 to 4 jobs, FP&A jobs a week. Then we have monthly Q&A sessions where you can directly clarify all your doubts with the faculty. External speaker sessions, CFOs, FP&A leaders, tool providers, latest tech experts. All of those people come once a month for expert sessions for our alumni. And all of this happens through seamless online LMS, and also our WhatsApp groups and Zoom calls that we use to conduct these sessions as well. So talking about the 10 comprehensive modules, right? So it has 10 comprehensive CGFPA program, everything that you generally need for being successful at FP&A roles. I'll let Asif cover the first 5 modules that you see on the left, and then I'll talk about the modules on the right.
Thanks, Saul. So I'll talk about budgeting forecasting first. So there we cover all the different methods of budgeting, right from top down, bottom up, incremental, zero based. There are more methods. Then there is the entire step by step process of how do you create budgets, right from revenue budgets to different production, cost of goods sold, inventory, SG&A budget, capex budget. So you look at different how do you create different parts of the income statement while you're doing the budgets. Then the entire annual operating plan process, right from creating guidelines to the budget calendar to the end CFO review happens. So the entire journey is covered using real life examples, capstone projects. That's a little bit about budgeting forecasting. For finance and FP&A is a module where we cover whatever use cases we have seen are applied in finance and FP&A roles using AI tools like Copilot and ChatGPT and newer tools that are coming up. So that is what we try to do in that module. Management reporting, as we saw today, we look at lots of examples of management reports through case studies, simulations. Then we do performance management frameworks like balance OKRs, KPIs that you saw. Apart from that, there are sections on variance analysis, profitability analysis, recharges and allocations, and there are more topics probably which I am not able to recollect now. So this is on the management reporting side, and then financial modeling very specific for FP&A roles. They are covering your day-to-day use cases like how do you create revenue models, how do you use best practice in financial modeling to create business models to be able to do scenario planning, sensitivity analysis, to be able to create cash flow forecast, to be able to do capital budgeting. So all of those concepts are covered in the financial modeling for FP&A module. Then I let Dhaval cover the analytics and the other modules that you see on the right hand side. So I'll pass it on to Dhaval.
Thanks, Asif. So on the right, we have the data analytics module. One thing that is common in your FP&A role is that you will be dealing with large chunks of data, whether it is financial data or operational data, and you need to know your way to navigate through this data. So that's why we cover all the fundamentals around Power BI, Power Query, SQL. We don't claim to make you an expert in these tools, but at least take you to a level where you are comfortable using these tools in your day-to-day FP&A roles. Then financial analysis, not just about ratio analysis, it's about different types of analysis like horizontal analysis, vertical analysis, different types of profitability analysis, all of these things more from an internal standpoint as to how a CFO would manage the performance of the business. So that is what is covered in the financial analysis module. And then comes your storytelling and presentations, the way you present your data, the way you present a CFO dashboard, what are the frameworks or best practices that you use for your presentations. All of those things are covered in the storytelling and presentations module. And the more senior you get, right, you need to understand how to tell your story, with your numbers. Use that for your strategy. In the strategy module, we cover all the popular strategic frameworks and how they intersect or how they interact with the FP&A teams. Like, for example, if I have to take a decision on expanding into a new market, what strategic framework do I use? And how can I support it with my strong financial analysis? So that is what is covered. Strategy is not just about theoretical frameworks. It's also an intersection with how finance can support these strategic decisions. So that is what is covered in the strategy module. And then comes your business partnering, your ability to build strong cross-functional relationships, your business acumen, your industry understanding, how do you influence the business, all of those things through practical case studies and examples that we have seen in our careers. We share it in the business partnering module. So all in all, 10 solid modules, 6 months comprehensive program, everything that you need to be successful in your commercial finance or FP&A kind of roles, we cover in the CGFP program. So don't just look at this as a course. This is fast track 2 decades of experience compressed into a 6-month program. So that is what is pay program for you. Now, what is the eligibility criteria? How would you get award? How do you get awarded the CGFPA certificate? So there are 2 conditions. One is, or the 2 options for you to be eligible. One is you need to either have a bachelor's degree or a global equivalent in finance, accounting, or business. Or alternatively, you may have your professional qualifications like CA, CPA, CMA, ACC, or any of these qualifications. So we don't claim to be a substitute for your primary qualifications. We are in fact a supplement for your primary accounting qualifications, because FP&A is something which is generally not taught in these accounting qualifications. We are also CPD UK accredited, so you can continuing credits in all your professional qualifications as well. Now, how do you get the CGFP award? There are 2 conditions. One, you need to attend the classes, at least 50% of the classes live online, right? So every Saturday we meet for 2 hours where we share all our case studies, content, simulations, discussions. You need to attend at least 50% of the classes live, and then you submit a capstone assignment. Typically happens in month 5, month 6. All the guidance will be provided around the capstone. It is an end-to-end budget presentation, a preparation of a budget, and then a presentation to the CFO. That's the capstone project that you will go through. After you submit these, then you will be eligible for the final examination, which is a CGFPA final exam. 2 hours, 50 questions, 100 marks, multiple choice questions examination. And once you complete the examination with at least 50% passing marks, you get awarded the certificate from FP&A Professionals Institute. We are not connected to any government body. We are a private institute at this point in time. CPD UK accredited. You can claim continuing credits in your existing professional qualifications as well. Now, the ROI for a valuable course like this, which can easily fast track your career by a couple of years, I leave it to your imagination. The course fee investment in this program is $1,595. Payment plans are available. The duration is for 6 months. Every Saturday, we meet live for 2 hours from 8 p.m. to 10 p.m. IST. And about 60 to 90 minutes of your own time investment is required to go through the pre-reading materials, cases, some pre-reading videos that we will give to you, so that we can maximize the time in the classroom for quality discussions around case studies and practical aspects as well. So about 3 to 4 hours of your weekly time investment is what is required for the CGFPA program. The cohort is starting on 28th of June, that is end of this month, on Saturday. The orientation session was on 7th of June, so that's why you see the 7th of June date on your screen. The orientation has already happened, but we will be doing one more round of orientation for the next round of applications and the enrollments that happen. The actual classes are starting on 28th of June, 2025. The date that you need to remember is that the final round of applications for CPA program for this cohort will be closing on 15th of June 2025. There are already 3 rounds of applications which have already got. Students from more than 10 countries have already enrolled in this. Make sure that you fill in your applications as soon as possible. Asif is sharing the application link and the brochure in the chat box. Make sure that you fill in the application as soon as possible, preferably right now, so that you don't miss out on any of the the last few seats that are available. So make sure that you are able to fill in the applications. Again, don't just take our word for it. There have been tons and tons of testimonials. You can reach out to any of our alumni and they'll tell you how CGFPA program has been valuable for them. Many of them have been able to transition to FP&A roles even during the program as well. And many of them have been able to implement a lot of frameworks that they have learned in the CGFPA program. Many of them have been able to build budgeting frameworks, management frameworks, OKR, all of those things they have been able to implement in their current jobs as well and get a lot of appreciation from the management. Okay, again, don't take our word for it. Talk to our alumni and they'll tell you about the CGFPA program. Cool. Just reiterating on the date that you need to keep in mind, 15th of June 2025 is when the final round of applications are closing for the current cohort. Whether you decide to do the CA program or no, one thing I would recommend is that complete the application, let our team check your eligibility and come back to you with an offer that is prevalent at that time. Make sure that you at least fill in the applications and then you can decide and take a final call sometime later. Cool. So that's what we had to share about the today's session and also the program that we offer.
Yeah, good.
Yeah, one question we always keep getting asked is that, how practical are the cases that we share in the CGFP program? I would say it's 100% practical. The very fact that, we want to train you on practical stuff which you can go and use in your jobs directly. All the cases that we share are highly practical, although adapted for a classroom environment, but they are derived from practical real life situations.
Okay, all right. Thank you so much, guys. We will see you in one of the future sessions or maybe in one of the courses certifications.
Okay, thanks everyone.
Thank-
All the best. Keep learning, keep growing. Bye-bye.